Welcome back, thrill seekers, to the wildest ride on the stock market, Eli Lilly and Company. Strap yourselves in as we take a heart-pounding journey through the financial metrics of this pharmaceutical powerhouse. Buckle up, folks, because we're diving straight into the numbers. First up, let's talk P ratio, or price-to-earnings ratio. Eli Lilly's PRTTM is a staggering 100.96. But hold on to your hats, because over the last 5 years, it's been cruising at an average of 41.47, indicating a huge potential overvaluation. Now let's zoom forward with the PRFWD at 39.37. Looks like Eli Lilly's future is looking bright, but if growth expectations decrease, the price will fall. Next stop on our adrenaline-fueled adventure, price-to-earnings to growth ratio. Eli Lilly's PG is revving at 1.88, signaling a smooth ride ahead in terms of growth potential. Remember that a value around 1 is when a stock can be considered undervalued. Hold on to your seats, thrill seekers, because we're about to take a loop-de-loop into insider ownership. With a whopping 10.62%, it seems like the insiders are loving this ride as much as we are. Now, let's talk about returns. Eli Lilly's return on equity is soaring at 51.15%, return on assets is cruising at 10.48%, and return on invested capital is racing at 29.48%. Looks like this stock is delivering thrills and spills for investors. But what about the heart-pounding EPS, or earnings per share? Eli Lilly's EPS is coasting at 7.28, with an adrenaline-pumping EPS growth forecast of 53.8% over the next 5 years. But wait, thrill seekers, the excitement doesn't stop there. Let's take a thrilling plunge into the evolution of earnings per share over the last 9 years. It's been a wild ride, with a jaw-dropping compound annual growth rate of 11.29%. Hold on to your hats, because we're about to hit a bump in the road. Free cash flow per share took a nosedive in 2023 after a positive ride until then. But fear not, thrill seekers. With a compound annual growth rate of 8.56% between 2014 and 2022, Eli Lilly is still on track for thrills and profits. Now, let's take a scenic ride through dividend yield country. At 0.72% and a thrilling dividend growth of 9.12% over the last decade, Eli Lilly is keeping investors on the edge of their seats. But hold on to your hats, because we're about to hit a high-speed turn. With an operating margin of 31.58% and a profit margin of 17.08%, Eli Lilly is racing ahead of the competition. Now, let's take a breathtaking view of the evolution of revenue and earnings over the last 8 years. With positive earnings and revenue growth over the last 6 years, Eli Lilly is leaving competitors in the dust. No wonder it's outperforming VO in the market. But before we reach the final drop, let's talk about debt. With a debt-equity ratio of 2.05 and long-term debt-equity ratio of 1.92, Eli Lilly is navigating the financial landscape with skill and precision. Hold on to your seats, thrill seekers, because we're about to hit the grand finale. With an average price return of 70.45% over the last 52 weeks and a market cap of a staggering $661.77 billion, Eli Lilly is the king of the stock market roller coaster. But wait, there's more. Analysts predict a thrilling upside of 15.34% in the next 12 months, with a target price of $848.35. But hold on to your hats, because I think the fair value of Eli Lilly is $557.35, suggesting a potential overvaluation for me. Be careful, because you are paying currently 100 times earnings. Well, thrill seekers, that concludes our wild ride through Eli Lilly and Company. Whether you're an adrenaline junkie or a cautious investor, one thing's for sure, this stock is one heck of a roller coaster ride. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing.